Well, good morning, everybody. How are y'all doing this morning? I don't think Nate will be on today. He is at the U.S. Open. Hey, Hank. Hey, William. Hey, Ronald. Susan, Gary. Good morning, Stacy. So I believe it's just me flying solo today, which is cool. We'll have some fun. I had to pivot what I was going to do my training on today because, as I told you guys, let me just go ahead and pull up this image. I posted it in Telegram yesterday. Let me just get this copy and pasted up here. And then I'll share my screen for y'all. All righty, let me do this. Share screen. Entire screen. See the matrix there? As I told you guys on Tuesday, I thought CPI, if it was better or lower than expected, lower than anticipated, that it was going to send us skipping back to all-time highs, where we were going to get a multi-day quick rally and then drift up from there. We did get the lower than expected CPI. However, oh, nice, Hank. Closed the profit pairs. However, we didn't get that skip. Actually, just the opposite. We opened higher. If I bring this up here, S&P faded the gains. I actually got in Telegram, so about a third of you are right on that. I was obviously on the other side of it. I thought we were going to go boom, 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 boom. But here we are now, boom, boom, where we're slightly down second day in a row. So I was going to do a breakout training, but now it looks like we're going to have to do the opposite. I'm going to do a fade trade training. Basically, what do you do when the S&P falls 2 or more days in a row? Now, we'll see how it ends up today. So far, this would be the second down day and on good news. So it might work out perfectly for us. But I'll walk through the training. Obviously, this will be recorded for you guys to review. And I'll give you some codes. We'll build some scanners. Those links will be posted in the members portal. They should already be in there, I believe. If they're not, let me know. So we'll get going here in just a second. Now, I do have an announcement to make for you guys. Obviously, we're trying out this new streaming platform, and it's been pretty awesome overall. But there have been, some complaints about the screen size, some other features. So we're working with the team who runs this platform to get some of those things fixed. But we will, starting on Monday, be back in Zoom. So we'll be back in Zoom on Monday. So you'll get your full screen back, separate chat box, all of that good stuff, while we work on getting this polished up with your guys' feedback that you gave us. So really appreciate everyone's feedback and commitment to making it better for not just yourself, but everyone involved. So the big announcement is Monday we'll be back in Zoom. Tomorrow we'll still be here on this platform, but then we'll start working out those kinks, working out those bugs, and get it better for you guys. All right, let me get this over here. With that said, let's dive into the overnight trades training. Now, there is something I want to cover here, and actually, let me pull it up here. Actually, let me get a slideshow view. Let me see if I can do the presenter view. It might be easier. All right. So first things first, we're gonna have some good trades good training today. We're gonna go look and find some trades. Obviously, trade at your own risk. Don't go all in with any single trade. We'll have some fun. I'll get excited. You probably get excited, but I don't want you to be too excited where you forget what's my risk appetite. What's a smart investment for me? Maybe paper trade if you're new, because there's going to be winners, there's going to be losers. I typically go for strategies with win rates 70, 75% or higher. This one I'm going to teach you today is closer to 62, 63% win rate, where the wins are beating our losses over the long haul, but it's not one that you can, it's no consistent income strategy or anything like that. This one's going to look for a little more juice, but a little less win rate. So just make sure you know that there's going to be winners, there's going to be losers. Don't bet the farm because you don't want to lose that on any single investment. You want to be able to invest an amount that you feel comfortable with, even if it were to go to zero. And obviously, you hopefully, like Kane taught us earlier this week, would want to have a winning edge where over time it makes up for it. But just be smart out there, guys. So, my name is Graham Lindman, and today I'm going to teach you one of my favorite ways to identify stocks with a strong likelihood of gapping up overnight, and then we're going to apply options to them. Now, this works best when we get two aggressive down days in the markets overall, which so far this morning, I was like, we got to do this next because the markets were down a quarter point, a little further on some of the indexes. It'll be perfect for that. Right now, we're getting a little gap fill, so we'll see where we end up. But ideally, we want to see a couple down days in the markets, apply some options on it, and then make some money overnight on a gap up. So today I'll cover this approach to spotting stocks that are primed to jump overnight, and then I will show you some options selection. Now, the technical pattern that we're going to talk about today is called a bullish fade trade. So it's a bullish trade, but fade trade. That means you're taking a contrarian position to the market on the short-term time frame. That's what the fade is. So again, if the markets are going down 2-3 days in a row, that short-term trend is down, we're going to do the contrarian play and fade it to the other direction overnight. Now, you may have heard of things like reversion to the mean talk in the stock market. Has anyone heard of reversion to the mean as a popular trading strategy? Yes, Carol. Yes, Donna. Yes, yes, yes. So reversion to the mean basically means that a stock is in a bullish trend. A stock that is in a bullish trend should stay on that midline. So here was just a screenshot of the S&P. This was over the last year or so before that big dip we had. But even so, if I pulled it up now, it's reverted to the mean already. But basically, if you were to not, ignore those candlesticks, picture them out of your head, just draw this line. That is what the markets do. They go straight up and to the right. However, they don't just go up every single day. There's ebbs and flows, but they always come back to that midline. So markets get a little overextended, come back to the midline. A little oversold, back to the midline. And this is the pattern of the markets, right? Reversion to the mean. It's not rocket science, nothing like that. It's just sometimes buyers step in and they're in control, and they take profits. And then the sellers take control. They take profits. And we go back and forth, back and forth. But over time, markets trend higher. Now, it doesn't move in a straight line. It goes higher than lower, then higher than lower, but they always eventually revert to the mean. Now, with the bullish fade trade, that's exactly what we're looking for, but we're doing it on a much shorter time frame. So instead of needing 2 weeks to revert to the mean, we're looking for it to happen overnight. So generally, I want to see a good, strong stock that has fallen 2 to 3 days in a row and buy it at the end of the day for a potential overnight gap higher. For example, a trade we had on Google, down 1 day, down 2 day. You buy that second day, sell the overnight move, hopefully make some money. This was a screenshot from the Moonshots trade we took, 60% overnight. Or the trade that we had on American Express, down 1 day, down 2 day, down 3 day. And you might look at this and say, well, this is green. That's not down. Well, if you look from the close to the next close, it is down, 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 down. 3 days in a row. It's a good opportunity to buy for a short-term reversion to the mean, and you sell at the morning up here. Goes from 296 to 299, one and a quarter move on AXP with the options 54% overnight. So typically, I like to buy as close to the 4 p.m. bell as possible and then sell the next morning, right? Just if you've been following, does anyone here use Nate's overnight options strategy? I think Kane has something similar. I mean, his might be during the day, but overnight options where you buy or you're setting your trade at the close because there's an overnight phenomenon. Same thing here, guys. Take a look at this chart dating all the way back to 1993 through this year. What you're looking at is the average market return from trading during the day. So basically, if every day at 9:30 a.m. you said, I'm going to buy stocks, and then you said at 4 o'clock, I'm going to sell them. So you're just holding the gains during the day. Well, you actually would have lost money. There's no money to be made during the day, typically speaking, over the long-term trend. However, all of the moves in the market have happened overnight. So if you're buying at 4 p.m. and selling the next morning at 9:30, That's where the biggest, most consistent moves have happened. So the blue line shows you the movement during the regular market hours. Zero return from trading during the day. Now, there's still good opportunities. I'm not saying don't day trade or anything like that, but buying from 9:30 to 4 is typically a losing proposition. However, the orange line is a movement that happens when the market is closed overnight. So as you can see, almost no money to be made during the day. All of the best returns happen overnight. So that's why I personally like to buy at about 4 p.m. and then sell at the next morning opening bell, because yeah, the stock could go higher through the day. I've seen that happen, but typically stocks chop around during the market hours. So let's just get those profits booked in and be out. So let's walk it through step by step. Step number one is to build a scanner. Now I'm going to give you guys here a scanner in just a second, but I'm going to just show you these steps first. Step two, we're going to sort for the strongest stocks, just like we do with the sectors. This will give you the stocks that are good, positive trend, but have fallen for a couple days in a row. Then I'm going to walk you through this. Click back to the charts for easy viewing so you can just get a quick snapshot of what it looks like, and then trade it from there. So let's go through some good and bad examples. And I'm going to scroll back here to step number one. So step number one is to build a scanner. I know some of you guys use StockFetcher. Some of you guys use Thinkorswim. And I'm not sure why this is linked like this. Let me see if I can fix this. It's weird. All right, I'll post it in the chat and see what happens. Can you guys click these links? All right, there we go. Pin them in there. I haven't made it for TradingView. I really don't. I don't use TradingView that much. I know a lot of people do. I always pretty much stick to Thinkorswim for everything. But Pete, if you want to take one of those scanners, put it into ChatGPT like I showed you, just copy and paste the code in there and say, can you make this same scanner for TradingView? And I would bet you that in about 30 seconds, you'd have this same scanner for TradingView. Okay, these work. Awesome. So that first one I posted in there is the StockFetcher code, which is what you're seeing this screenshot here. The other two are for Thinkorswim. Let me just open them up on my end. And there's a couple different filters here that I want to show you as we walk through it. So I'll start with let me just add in here StockFetcher. I'll start with the StockFetcher one here and walk you through it. So this yellow line here is our variable. Like I said, we typically want to find stocks that have fallen 3 days in a row, but you could also take the stocks that have fallen 2 days in a row. The reason I want to bring that up today is because a lot of stocks today have fallen 2 days in a row. So let's go ahead. I'm going to copy this code. So I'm going to highlight this whole thing. I'm just going to copy it. So now it's copied on my clipboard. And now this is the StockFetcher code. So let me go to stockfetcher.com. And once you hit the landing page or the home page, it looks like this. If you have an account, you can log in. If you want a free account, I believe you can do like 5 filters for free. I'm not exactly sure. But let me go ahead and click here, new filter. And then once I do that, I'm just going to have a blank slate here. So let's come here and name it bullish. I'm going to call it delete because I already have one. Delete, but don't call it delete if you want to keep it. Bullish fade trade, 2 days down. So that's my name for it. And then I'm just going to paste in that code. Now remember, so the code's all here. I can fetch stocks, all that good stuff. But remember, this one's a little bit more filtered because I have that 3-day rule in there as well. So let me just take out that 3-day rule. And just delete this out. So now I've got 1 day and 2-day rule in there. I'm going to go ahead and save this filter. So now I can come back and view it later. Fetch stocks. And again, so now we have our scanner built in. And what I'm going to do next, this site is stockfetcher.com. I'm going to, Rob, after I do this, I'm going to show you guys in Thinkorswim how to do it as well. All right, so now we want to sort for the strongest stocks first. I already did that, but you would just click this average percent button. It's already built into the code I gave you. So click here. This is going to give us the strongest to weakest stocks, just like I do with the sector overview each and every week. And let me make this a little bit bigger so you guys can see. So AMD right now is the strongest, Boeing, Monolithic Power, on and on and on, versus the at the bottom of the list is going to be stocks that are no good. Let's look. Deckers Outdoor, United Airlines, stocks that have not been looking, CRM. So let's go back to this first page. I punched in the code, fetch stocks, sorted by average percent. Now, next thing I want to do is just go look at the charts for easy access viewing. So here's AMD. This one looks like a great example, actually. Good, strong stock by the look of it, and I'll pull it up in Thinkorswim too. Last couple months have been very bullish for this stock, and 2 days down. That could be an opportunity. Boeing, well, they just had a plane crash in India, which is very sad. So I'm probably not going to touch that stock. That just happened last night or this morning. So that's probably why that one's down. So I'm not going to try and trade any ones that are news related. Empower, let's take a look. You can see here down 1 day, down 2 days. I just pulled it up with my Thinkorswim. I don't really love the look of the chart, but it's all right. It could be a good one. Here's one stands out. But anyways, what we're looking for here is just a good, clean couple days down in a row on a strong stock. And the way that this filter works, and if you sort it right, these all should be good picks. Now, I must say, typically you don't get 100 stocks on this filter every single day. Typically, it's just a handful. But with the markets being, lining up with this, that's why we're getting so many today. Let me see what Southwest Airlines looks like. All right, let me keep going here. So this is just to show you how it works and how you can filter through these stocks. Again, there's about 1 trillion stocks today, 92. Normally you get like 14 to filter through. But let's go ahead and add in that next filter then. Let's add this 3 days down to see if we can get a more high conviction trade. So if you didn't already, you can just copy and paste that code in. It'll have that 3-day filter. Let's go and fetch this. So now there's only 25 stocks that meet the criteria. And I'm going to sort by average percent again. Let's go ahead and hit those charts. Boeing again. You could trade Boeing, but I don't know if that's one. It is gap filling nicely. Actually, Boeing looks pretty good today. Is it frozen, guys? Are you guys able to see? FMC. Haven't traded that one before. Not my favorite looking chart. It's not a pretty. Here, let's just pull this over here. I mean, it looks like a stock that probably wants to head lower. Let's look at Honeywell or even Owens Corning. Man, Honeywell's already up on the day now. Some of these stocks are already up on the day. Ralph Lauren looks like it could be a good one. That's right here, RL. It's like this is the kind of chart you want to see. Obviously, had the big correction in March and April, like a lot of stocks did, but a very strong stock, almost got to all-time highs. It's been sliding, and you can see here 1, 2, 3 days down. Today is the 4th day down for this stock. Actually, there's been more than that. 1, 2, 3, 4, 5, 6, 7 days down. So if you just basic reasoning says that a stock doesn't typically fall that many days in a row. We all know it can happen. Like with GE, it's gone up 1,000,000 days in a row, it seems like, except for not today. Let's look at GE. Oh, here's a great example of what we'd be looking for. GE, great strong stock. 1 day, 2 day down. You would buy it here at the close and see how it pops the next day. That's kind of what we're looking for. Here's Honeywell. Again, this would have been a great one to buy probably yesterday. 1, 2, 3 down days. Up slightly today. But let's keep some of these stocks in our mind right now. And then let me go ahead and show you how to install this code into Thinkorswim as well. So this first one I gave you 2 days down. Thinkorswim scanner is going to give you those that have fallen 2 days in a row. 3 days down is going to be a little bit more filtered, the ones that have been down 3 days. So it's just going to be a few less stocks than the um, fewer stocks than the 2-day down filter. And I think, let me go check. I think if you have the opening playbook members portal, you should have this code in here. So go down to trading codes and scanners. Let's go ahead and see all. Oh yeah, here you go. Fade trade 2 days down, fade trade 3 days down, and there even is the short link for installing that. So if you guys want this, John, I haven't built this on E-Trade. I don't use E-Trade anymore. I used to, but I just like Thinkorswim now. However, John, if you want to recreate this in E-Trade, again, I would take this code I gave you, paste into ChatGPT, and ask them to recreate it for you for E-Trade's power trading tool. And I bet you in 30 seconds, you're going to have the code. All right, so what we can do here, let me just click this, say view in Thinkorswim. Oh, it's going to make me log in again. All right. I'm just going to copy this code then. And then here in Thinkorswim, I already have it, but I'm just going to do it anyways. Set up, open shared item. I'll paste it. Preview. See, I've already got it, so I put the 1 there. But let me go ahead and import that. And it's imported now here. So over here on my watch list, I can go down and find that one I just imported. And much easier than with, didn't mean to do that. Much easier than with Stock Fetcher. I can just click through these ones and they'll pull up on the chart. So let's go ahead and look through some, see if we can find a trade. Tell me, guys, if there's anyone that stands out to you. So like ADP here stands out to me. It's down 5 days in a row, it looks like. Very overextended to the downside. I'm not sure what the news is on that, if there's something that happened, but it is at the 50-day moving average. Should see some resistance there. Yeah, dividend tomorrow, but you would think they would be past the ex-dividend date. Right, Bob? Let me just sort these by ticker because they're moving around as a percent change. So there's ADP. AMP, this one looks good too for multiple reasons for me. One, it is down 1, 2, 3, 4 days in a row. It's also bouncing off the 200-day moving average, right? Seen that there, seen that here. So this one looks really good. Now it is a financial. You guys know I don't love financials right now, but I don't hate them either. eBay, is eBay on the list? Oh yeah. eBay looks really good. Let me just type some of these tickers here so I don't forget them because I'm saying a bunch of things. What was the one we just looked at? Was it AMP? Yeah. AMP, eBay looks really good. Let's keep going. Again, Boeing looks like it. I mean, this is not one I would personally take, but if it does pay off, it could be a big payoff. See, like Coinbase, I don't love. Yes, it's down 3 days, but it's also like in the sideways range. It's not one where buyers typically step in right away. Yeah, eBay looks really good. EXPE doesn't look bad. Some of these are not so pretty. I like the other ones better. Paycom looks pretty good. However, it seems like some of those, like AMP and Paycom, were both having these. Was it or ADP? Sorry, ADP and Paycom, both on multi-day slides. Let's see. Just curious. I haven't traded those stocks in a while. I was just curious if there's something going on. Oh, the cruise lines look good. I saw CCL earlier. I think it was a 2-day down scan. But let's go ahead and add RCL here just for one to keep on our watch list right now. CETAS. Let's see. Yeah, that one looks good too. Bob. All I'm trying to do here is just filter down for the best looking stocks. So I've got down 4 that I like right now: AMP, eBay, RCL, and CTOS. That could be good trades. Now, again, of course, my thought was, since we had that fade yesterday where the market sold off at the open, and this morning we were opening lower, my hope was we get a little bit more of a flush where we can have a bigger opportunity. Typically, as I'll show you in this training, there's a note here down at the bottom I'll show you, where if you match it up with the S&P, so if you can time it up with when the S&P is down 2 days in a row, it's just going to increase your win rate. So for example, here's the S&P. You can see 1 day, 2 day up, 1 day, 2 day up, 1 day big down, and then another down day, then an up day, down, down, up, down, down, up, down, down, up. So my hope was today we could time it up with the S&P, but now the S&P has closed the gap. It's up on the day, so we can still take a trade. We just aren't going to have that double whammy, extra wind in our sails. So now we have a little watch list. Let's go through some good and bad examples of what we may want to look out for. Whoops. All right. What is this? Okay, this is an example. Fortinet right here. This is a perfect example. Good strong stock, kind of like eBay, like we saw right now. 2 days down, bam, it pops overnight. Great move. What we want to avoid is things coming off news or earnings. So like that's why I said I'm not going to trade Boeing today. It's coming off some pretty devastating news. This was an example of Take-Two coming off massive earnings. 1 day, 2 day down. Either way, I mean, it could have worked out. It looks like it worked out there, but that's one I would pass just because you don't really know. It's not so much that the normal reversion of the mean buyers and sellers are in control. It's just all news related. JPM example here, 2 down days. Most recent was a big sell-off day. So if we're looking here and here, we like stocks that are really good that have these big flushes. Big flush, like here, typically means, okay, this might be a little overextended. Bam. Big flush here, overextended, bam. So when we see those big down days, that typically can be a good one to jump in. Actually, Progressive, I think, is a good example today. So obviously, I look to avoid earnings, avoid stocks that are being manipulated with news or squeezes or other sorts of things there. Preferably, we should be trading strong stocks that are leaders in their sectors like we talk about each and every Tuesday. So general rule here, a strong stock, good sector, no earnings, 2+ down days, and good options, which we'll look at here next. Now, there are a couple rules for improving your accuracy and profitability with trading this way. Like I said, my typical trend sort of trading, swing trading strategies, I want 70, 75% accuracy. With this one, I'm okay taking a 62, 63% accuracy on these. But that's because the wins are so much bigger than the losers. So rule number 1, you want a strong stock, which we just went through, that just has that 3 days down. Now, this gives us an extra day of a stock reverting away from the mean. So why use 3 days instead of 2 days? Well, 3 days is just a slightly more overextended, which means the snapback could be even stronger the following day. Rule number 2, you want to time it up with the S&P. This doesn't always happen, but if you can get it timed up with the S&P like I just showed you, it increases our win rate. So when the S&P falls 2 days in a row, find some stocks that are down 2 days in a row that are good, strong stocks that hopefully the whole market rebounds the next day and yours gets the extra wind in the sails. Now, a good reminder, just go ahead and set yourself a mental note. Anytime the S&P 500 falls 2 days in a row, especially if we get a larger than normal sell-off, then go look for some good fade trade opportunities. Again, that's why I pivoted to this training today. I wasn't going to do it initially, but when I saw the markets down yesterday and then the futures were trading lower, I said, oh, this would be perfect. Now, today isn't one of those high conviction days, it turns out, as the markets filled the gap. But if we do get one of those 2 days, like if it's 3 o'clock and you're like, wow, the markets have been down 2 days in a row, we'll go review this scanner, go review the information in the members portal, and maybe find some trades. Now, for the option selection, there's different ways to select your options. If you want the basic calls, which are going to give you the biggest upside, they're also going to hold the most risk, in my opinion. You want to go for a short, tight dated expiration, 7 to 10 days out. This is going to give you a lot of leverage. It's going to make it cheaper. And about 1 strike out of the money. Sorry, 1 strike out of the money. That's going to give you a lot of leverage. However, the time decay is going to be pretty extreme there, so you are going to need a big move for it to pay off. But these are the Oklo weekly call options yesterday were up like 4,000%. So I typically look for like 100% gains. I don't typically trade the basic calls, but it's days like those where it's like, wow, I wish I had the basic calls. Number two way to trade it is a wrap order, which is my personal favorite, where you just need the stock to rebound. It doesn't need to rebound 3, 4, 5%. You just need a 0.5% here or there overnight to get paid about 100%. Number three way to trade it would be the 1% rule. So if you have a stock that's a good stock and you're okay with paying a little bit more for the call options, but you don't want to pay for the time decay, you just go deep in the money, buy a call that's going to give you some cleaner leverage on the move, and you aren't going to be paying as much for time decay. A bonus thought is look for Thursday entries. Why on Thursday? Well, expiration day is Friday. So if you want to do a spread or anything like that, Thursday is the perfect day to be trading it, which was going to line up perfectly for us today until the markets filled the gap. But if you do a wrap order on today, expiring tomorrow, you can get that full max profit overnight, and it's really, really great day to trade it is on Thursdays. Why no earnings? William is wondering. Well, because with earnings, it's not going to be the normal ebbs and flows of the market. It's going to be all about what the CEO says, what their projections are, how the reports came out. So it's not really natural trading. It's more news-based trading. So, William, I'm just trying to avoid news here and stick with what's going on naturally in the market. So now let's go ahead back to our Thinkorswim. CEOs have not been speaking well this cycle. Too news driven. Yeah, you're right. So let's go back here. And again, let's find some of those. I don't know why this isn't. There we go. Do you guys want me to make this a little bit bigger? Is this too small to see? Anyways, I'm going to go off these. Oh, I should mention, if you guys don't have the members portal, where you can access all the codes in an easy place to find it and the recordings and all that stuff, let me go ahead and post that link here in the chat so you don't have to keep track of all these links I'm posting here. Where is that thing? Here we go. If you want the members portal, $1 VIP portal, there you go. So that's where you can get all this good stuff. All right, back here, let's go find some options on these trades. I will make the screen a little bit bigger here. All right, there we go. So the first one we liked was actually, I think eBay was my favorite. Someone brought that one up. It's here on the scanner. I really like eBay. It's following our 3-day down rule on a very strong stock. It is pretty overextended to the upside, but let's look at like the previous times. That's not 3 days. Well, that might be 1, 2, 3. Kind of flat the next day. I always like to just get a visual check to see if this is a stock that typically snaps back quick. 1, 2, up. I did see, I think it was just into earnings back in October. But here's kind of like what we want to see on eBay. And I apologize, this will be a good view. So 1 day, 2 day, 3 day down, up. 1 day, 2 day, 3 day down, up. 1, 2, 3 up. Now this one was one that didn't work out. Right, but let's go ahead and see if we can make some money here on eBay overnight. And I'll post this in the trade doc for you guys as well. So I'm going to go with eBay. Great strong stock, down 1, 2, 3 days in a row. What I typically would do is take this trade near the market close. However, we're not going to be back on for the market close. So I'm just going to give you some basic options and wrap order now. And then if you want to take it now, you can. If you want to take it later, that's probably the better way to do it. All right, what is this called? Fade trade on eBay. 3 days down. So again, if I'm going to trade the call options here, I'd want to come about 10 or 7 to 10 days out. So next Friday's expiration. You can see how cheap these are. They're like $100. It's like buying a lottery ticket. And then my rule of thumb is to go one strike out of the money, which is a 77.5 call. So here I'm going to type this up over in the chat and post it for you guys. So you're going to buy the 20th of June, 77.5 call, and this is currently trading at $1.02. Let me just type in basic call. Market is open tomorrow. Yes. Max says it says broken. I'm not sure why that would happen. I just loaded it in here. This is the exact one I showed you. But if you want to, we do have customer service live every day from 10 a.m. to 1 p.m. They can actually walk through on a screen share and get that set up for you if you want to go meet them in there. So here's a basic call option if you want to take it. It's trading at 101. I'm just going to go ahead and send one off. Again, the time decay is going to be a little more aggressive, filled right away. But basically, and I can even come here. Let me show you this. Theoretical price will tell me if by tomorrow, June 13th, let's say the price gains $1. It's a little over 1%. Where will the options be? This theoretical price column will tell us it'll be about $1.50. So I'll be up about 50% overnight. Oh, it won't work on simulated trading, says Pete. You have to use the live trading. Interesting. So if eBay gains $1 overnight, we make about 50% on investment. Let's say it gains like 3% overnight, be about 220. You would gain about 130% overnight on the move. So this is just a calculator built into Thinkorswim. This is if the stock goes here, how much do the options move? Let me go ahead and reset that. Now what I'm going to do next is going to see if we can get that around 100% move overnight without needing a full 3% move in the stock. And I'm going to use my wrap order to do that. So I'm going to type this up for you. Wrap order debit spread. I'm going to buy the overnight one, right? I said Thursdays are great because we can trade the Friday expiration. So I'm going to buy the 13th of June, 77 call, and I'm going to sell the 78. This is going to be awesome. It's going to be risky though, guys. Let me just say that again. This isn't one that's like guaranteed to pay off as if anything would be guaranteed, but this is one that's going to be more of a 60% chance of working out. However, as I'll show you, we can get a pretty good risk to reward ratio here. And it was trading for a lot cheaper. Let me just see if I can fill it at 45. I'll leave it. Oh, it filled up 45. So ignore the prices there. 44 now. So I'm going to call it 45. Even though it's at 44. And I'll post them all in together. Let me just do this. Fade trade. William, yeah, it is posted in the members portal for the opening playbook members area, which is $1 for a lifetime. I posted that link in the chat. So it's trading at 44 cents right now. And basically what this is saying is if eBay, actually, let me just pull up a calculator. I'll show you in the members portal. So here in the members portal, we can go to wrap order calculator. And right now we're trading this eBay one, which I said we're buying the 77 strike call. We're selling the 78 strike call. Mistake in wrap sell order. Was there oh, yep, you're right. Delete. 78 call. Here we go. Fixed for you. I'm going to pin that. All right. So I'm going to type this all in here. 77 is the one we're buying. 78 is the one we're selling. Let's just say one contract, just to keep it simple. 45-cent entry. What's going on here? And guys, use a limit order. Make sure you use a limit order. Basically, this calculator here that you have in the members portal does it all for you. What we're doing, we're risking $45 to make $55. So that's 122% return on investment. So again, I told you that basic call option, you need eBay to gain about 3% overnight to make 130%. Here, we only need eBay to gain about 1% to make 122%. So that's why I like using these types of options where I think we can get a little more juice for the squeeze. Also, there's a break even calculation. Even if eBay is mostly flat tomorrow, even if it only gains 20 cents, which is about a third of a percent. Is it even a third of a percent? Yeah, about a third percent from here. We don't lose a lot of money versus the call options, you would lose money. Again, this is here in the members portal. I'll post that link again if you guys want access to our dollar VIP members portal where you can access all the goodies. Oh, okay, good idea. Suggestion incorporating Roger A line. You may consider adding the filter. Today's low, less than 8 EMA, and current price above 8 EMA. I'll take a look in that. I haven't played with that, but I know Roger's A line is more of a swing trade multi-day. So that's the first one there on eBay. I'm just going to set another one at 45 cents. Just see if it's still filling. Again, I took the basic call and the wrap just to show you guys. We'll see how it does. All right, let's go look at a different stock that we liked. Where did my handy dandy watch list go? Got to scroll up in this chat. eBay, AMP, RCL. I like AMP a lot. Oh, RCL is already up on the day now. Synthesis is up too. Let's go to AMP. I like it because we're getting a major support line here in the 200-day moving average. Oh, eBay filled again. There you go. So let's go ahead and take a look at AMP's options. Oh, they only have monthly options. So this is one that I probably wouldn't trade. Let me pull back up my. Where's mine? Oh no, where did mine go? Well, that's annoying. I normally have my own saved setting here, but it's not showing up today. Let me get open interest. So you can see here, volume and open interest on AMP options are no good. So it's not going to be a good liquid one for us to trade for the overnight move. Let's look at RCL. I do like this one, even though it's already filled the gap today. It could be one that you could trade later today if it does dip lower. You could even trade it even if it's finishing higher. ADP, it looks like it could be a good one. Obviously, some very aggressive something has happened here, but I think let's go ahead and trade this. It's 1, 2, 3, 4 days down now. And again, we're getting these aggressive bars. Let's go see what the options look like. These look like they would be tradable. Nothing on the weeklies. Super wide. Pretty wide there. If you wanted to trade ADP, I would buy the monthly 310 call. In fact, I'll just go ahead and do that now. Just because the options aren't really liquid enough for a wrap order. So let me just type this up and I'll post it in the chat. This one's on ADP. Buying the 20 June 2025 310 call. And again, this is not a high win rate strategy. We're not looking for to win 90% of the time. We're looking to win about 60, 63% of the time where we can get a lot of those 100% winners and cut the losers off quickly. All right, well, the price just moved, so let's go ahead and set this 183 mid price. And then I'll just use that Theo again to show you basically what happens. So by tomorrow, let's say AMP gains 1%. Let's see what happens to our options. 285. So that's a pretty good move. That's what, 60, 70% move. Let's say AMP gains 2% tomorrow. That would be a huge move. And we'd have about a 200% return on investment. So that's the beauty. That's the good thing about using basic call options is you can get that higher payout if you're right. But if you're wrong, you lose more. All right, there you go. Filled right away with $1.69 there. Now you can also use this fade trading to the downside as well. If you look at stocks that are up 3 days in a row, in a poor sector, poor trend, you can fade it by shorting it overnight or buying puts overnight. Mac, hopefully we win on these trades to pay for the $1 you made me spend. Yeah, I know. Imagine if everything was $1 in life. Imagine if the dollar store kept prices at $1. So that is in essence how to trade multiple down days in the markets. Again, my thought was today was going to be a perfect example. But it's good training to have. But today is not one of those days where it ended up the markets are looking really strong today. We wanted to see something more like they get multiple down days. Bam. So definitely something good to have in the back pocket, though, for when anytime you see the markets down 2-3 days in a row, you should instantly say, wait a second, there's something I should be doing today.